I generated $9,000 this morning using capital that wasn't even my own. You can sign up to any one of these websites that will pay you $10,000 to a $200,000 live trading account. However, there is a catch. Each and every single one of these accounts will cost you a fee. So for example, the $100,000 account will cost you $497. But there is another catch. If you pass the evaluation, which is a test that proves to this company that you're a profitable trader, in order for them to give you this live, for example, $100,000 account, you will get refunded your $497 fee plus an extra 20% on top of that. Provided that you pass this $100,000 evaluation, you're getting a $100,000 account completely for free because you're getting your $497 refund fee back in full 100% plus an extra 20% on that $497. So this is what I did. I took the time and effort into studying a mentorship in order to become a profitable trader. I purchased myself 3 of these $100,000 accounts, passed all 3 of them using the knowledge that I've learned from my mentorship, and started trading these live accounts. In my first trade yesterday morning on the live account, I caught a 1 to 9 risk to reward on EURUSD, meaning I risked 1% of the $100,000 account, which was $1,000, to make $9,000 profit. So I've made $9,000 on this account, which is due for payout in 14 days, without investing any of my own capital, without putting any of my own capital at risk, technically completely for free. In today's video, I'm going to show you how I hop onto the charts every single morning, formulate my trade plan to trade my live $100,000 account successfully and profitably. Now, most profitable traders won't tell you this because they're too busy making money from this. So in today's video, I'm going to give you a sneak peek into the premium content that I teach my private members completely for free. I'm going to show you some concepts that you can demo trade and backtest and practice before you take this into the live markets, giving you the confidence that you need in order to execute your trades. Alright guys, so we are now inside of my PC. I'm going to speak as slow as I can. I'm going to explain in depth and try and keep this as simple as possible for you guys to understand this concept. I've tried to keep this as mechanical and rule-based for you as possible so that there are specific steps that you can follow when hopping onto the markets and the chart every single morning. So first and foremost, I'm going to give you guys another little secret. If you want to go with the website that gives you the funding capital that you need to trade without actually having to pass the evaluation, you can come over to a website called instantfunding.io where you can purchase live accounts off the bat straight away. So you basically, if you think about it, trading money for money. So you can go and buy a $1,250 live account for $79. You can buy a $10,000 live account for $440. And you can buy their largest account at $80,000 for $3,460. And you get a profit split of anywhere between 70 to 90% of the profits that you make on your trades. And this is ultimately how the prop firms and how these websites are able to make money from this. It's a win-win from both sides. You're able to profit from this company and they're able to profit from you because they're giving you the capital that you need and that company is making profits off of that capital that they've given you. Alright, so back to the charts. First and foremost, I want to explain to you a little bit of an introduction into how structure and order flow works. I'm a full-time Smart Money Concepts and Inner Circle trader. First and foremost, my mechanical rules are every single morning is I have a look at the daily, the 4-hour, and the M15 timeframes, and they all complement each other. The daily operates with 4-hour internal structure, the 4-hour operates with M15 internal structure, and so forth. So let me break this down for you. Each and every market that has buying and selling institutional power will move in the following, in the forms of higher highs and higher lows, and I'm sure you've been taught this over and over again. But it's very true, and it's one of the most simplest concepts that you need to understand moving into the market. Now, the markets don't necessarily look as neat as this. What it will look like is, let's say this is the daily time frame. Within the daily time frame, we will have 4-hour structure that occurs with smaller, higher highs and lower lows. All right? Forming at the peak of those daily highs, those 4-hour lower lows. At the peak of those daily lows, new 4-hour higher highs start to form. All right. Now, oops. Okay, I just messed this one up a bit, but let's just keep that like that. Within the 4-hour structure, all right, let's just label this as H4. Within the 4-hour structure, we have M15 structure. So inside the 4-hour structure, we have more tiny M15 structure, higher highs and lower lows. That follows throughout the order flow. So once you apply the more mechanical way that I'm going to teach you in this video and how to spot this in the charts, you will ultimately go into the market every single morning with clear context, a clear crystal understanding of exactly what to expect from expectational order flow, and you can start to then formulate trade plans from there. Okay, so I'm going to remove this for now, and we can go and apply this on the live charts. So over here on the daily time frame, on Euro USD, all I look at is plus minus the past couple of months. So for example, I'm looking from February, and we want to look for clear structure that's forming. For example, the daily expansion, daily pullback. All right, into areas of demand, strong protected lows, weak highs. The expectational order flow is to continue targeting those weak highs. That daily pullback after that break of structure, as after every single break of structure, price is due for a corrective pullback, which is exactly what occurred over here from middle of April to the end of May. We then ended that pullback. We had that internal 4-hour shift to the upside on the 4-hour time frame, that 4-hour pullback, and to continue with that 4-hour structure, targeting those daily weak highs. After that daily break of structure, we had that 4-hour internal shift, and that 4-hour structure has really been flowing throughout price from July to beginning of October this year. After this break of structure, we had our strong protected lows, which the 4-hour time frame never gave confirmation to start looking to target those daily weak highs. Instead, we broke daily structure to the downside. So all that changes now is our expectational order flow. What can we expect is the start of that 4-hour pullback into areas of supply to then continue looking to target those daily weak lows, new daily strong protected highs. Okay, so as I've labeled for you guys over here right now, we've actually just had, I just quickly want to delete these Koki pens over here, this 4-hour internal shift to the upside. So the 4-hour time frame has now broken structure to the upside, which is time for the potential daily pullback to now start, because we've had the daily break of structure to the downside. What can we expect after every break of structure is the pullback phase, which we confirm with our internal timeframes. So mechanically, daily is the swing, 4-hour is the swing, M15 is the internal of the 4-hour. All right, so now that we've got an idea of where price is lying on the daily time frame, is that we've just broken structure, 4-hour time frame has now shifted to the upside, we can start to expect, it's not a prediction, it's a reaction, to start that daily pullback phase. So we can then hop onto the 4-hour time frame, and again we mark out our 4-hour structure. And once you start to practice this, you will start to see it more clearly and more understandably every time you hop onto the charts. All right, so as you can see over here, we had that daily break of structure, the 4-hour internal shifts bearish, that 4-hour pullback into supply, strong highs, weak lows, price targets those weak lows. That 4-hour pullback into supply, targeting those weak lows. Pullback, target the weak lows. Pullback, target the weak lows. Pullback, target the weak lows. And it's really been following this beautiful supply chain ever since the middle of July. And if we take a look at what price did yesterday, we've now had price take out those 4-hour strong highs. All right, we're mitigating old supplies, but these supplies now are catering for 4-hour pullbacks into the actual demand areas, which is in control to now expect to continue targeting those weak highs, understanding that all of this that's playing out right now is just catering for that daily pullback. So hopefully you guys are already starting to see, by just looking at the higher time frames, what the overall intention and context of the market is. All right, I don't want to confuse you guys too much, but you can even take a look at the monthly. So if I had to have a look at the monthly, all right, price has now created that monthly break of structure to the downside. That monthly pullback has now started after that monthly shift to the upside. So these become monthly weak lows. These become your strong protected highs. So monthly supply is now currently in control. All right. So what we can expect is that pullback to the monthly, which is what we're seeing. And if this monthly candle closes below this previous monthly internal low, that signals we've now had that monthly change of character to the downside. So the expectation then is to completely follow through to target those monthly weak lows. Okay, but let's not confuse you too much. We can hop back to the 4 hour. All right, and I've made some labels for you guys over here. So as I've labeled yesterday, which is what the core CPI news did, we had that bearish H4 IBOS to the downside, which signals, again, after every break of structure, there's the 4 hour pullback. We're currently in that 4 hour pullback phase, which is exactly what the news yesterday catered for. It was expectation, and it's how the markets and it's how money in the markets move. Is price sold off simply because price is due for that 4 hour pullback, which is the shorts that I caught yesterday that I'm going to break down for you just in a bit. All right, so price has now mitigated the equilibrium of the overall 4 hour swing range. A 4 hour strong low, 4 hour weak high. This becomes our entire 4 hour swing range. We've now mitigated the 50%, so it's possible that the 4 hour pullback is now complete. However, I would like to see more structure form before determining so. Because at the moment, as this demand stands, this reaction for me could be liquidity to target the deeper, more extreme pullbacks before continuing the 4 hour bullish trend. Understanding that the higher time frame daily is still bearish, we're just due for a bit of a daily pullback before looking to continue short. Okay, so now we repeat the same thing. Within our 4 hour structure, we have M15 structure, which is our internal 4 hour time frame. All right, so if I hop over to the M15 time frame, you will see it more clearly, which again, I've labeled that out for you and I've put some notes for you guys here. Okay, so as of really the beginning of October, we had that 4 hour break of structure to the downside. We were then due for the 4 hour pullback. How can we determine that? Is looking for M15 swing highs to break to the upside. All right, M15 break, M15 pullback, M15 break, M15 pullback, M15 break, M15 pullback into demand, M15 break, M15 pullback, internal structure following through, targeting those weak highs until we targeted those 4 hour weak highs. So we're now due for that 4 hour pullback, okay, which is exactly what played out yesterday. We had that break of structure, we mitigated old supplies, which is areas that you can look for pullbacks to start from. We then broke M15 structure to the downside. So the expectation is now to continue flowing this through until we mitigate deeper areas of 4 hour demand, because this still remains as a 4 hour weak high. And until that M15 structure shifts to the upside, we can start to confirm looking for longs targeting these 4 hour weak highs. Again, understanding that all of this context is catering for the daily pullback. Okay, so hopefully again, you're starting to see how structure and order flow is playing out through price. Again, everything that you trade, every trade plan that you make can just be a simple reaction to price. Okay, so let's recap what price did throughout really October. Okay, as we were getting to the 4 hour week, as we were climbing to the 4 hour week highs, I've discussed this on stream again and again with my members, that price is going to take out these 4 hour strong highs simply because price is due for a daily pullback, which is exactly what we did. Then I also discussed on stream with my members is after price takes out these 4 hour strong highs, we can expect a bit of a 4 hour pullback, which will then be valid to start looking for shorts, which is exactly what played out yesterday and the trades that I entered, which again, I'm going to break down for you on the lower time frames. Okay, so as you can see clearly over here, M15 break, M15 pullback into demand, M15 break, M15 pullback into demand. All right, so as I've labeled out for you guys over here, M15 weak highs, break of structure. M15 pullback into demand. M15 targeting those weak highs, M15 pullback into demand. Confirmation, pullback, targeting those weak highs. All right, now we've mitigated higher time frame 4-hour supply. We've broken 4-hour structure to the upside. So what can we expect is that 4-hour pullback, which is exactly why I was looking for shorts off of this area of supply. All right, so we had that internal shift to the downside, which I'm going to refine for you now. We then had that pullback on the lower time frame, mitigation and the entry limit of the sell limit, and I targeted these internal weak lows and these demand areas for a 1 to 10 risk to reward. I'm going to break that trade down now for you on the real lower time frames. Okay, so you'll understand in a bit as I hop onto the lower time frames how my ICT concepts start to come into play. So I'm not a full ICT trader at heart. My markup and trade plans derive from this higher time frame structure and order flow system that I've made for you guys today here on YouTube. And this is concepts that I've taken years to learn and backtest and really engrave in my mind. Okay. So now where price lines after CPI occurred yesterday, expectation was to now start targeting these M15 strong lows simply because we confirm that 4-hour pullback after an M15 low breaks to the downside, which is exactly what we have. So all of the structure at the moment that you're seeing over here is M15 corrective pullbacks, which we can start to look for confirm of supplies off these M15 strong highs to target these weak lows, riding more of that 4-hour pullback. If price gives that M15 break of structure to the upside, longs will then be valid off demand that's in control to then continue targeting those 4-hour weak highs. Okay. We also do have a supply at the 50% of the M15 swing range. So this would be our M15 swing strong high. So ideally, if price reacts off the supply, gives confirmation, which I'm going to break down for you in a bit, we can look for shorts. If price fails the supply, we can then definitely look for longs to target those 4-hour weak highs. So notice how everything that I've marked out over here, every possible scenario, every possible trade plan is a simple reaction to what price is printing. There's no needing to predict. There's no needing to overcomplicate your trade plan. M15 swing and internal is currently bearish, which is providing a corrective pullback to this area of supply, which has also just swept this liquidity into the supply. Okay, don't worry about too much of those concepts right now. I do discuss that far more depth in my Discord, but right now I just want you to start seeing how structure and order flow is playing out. So the expectation that I've discussed with my members this morning is for price to have that corrective pullback into the supply. I will then look for confirmations on the lower time frames. Ultimately, just to give you you could say a sneak peek into my exclusive entry model that I discuss with my members, is what I like to see is price mitigate a zone, print that change of character, sweep that high, and then print that new change of character to look for confirm. Okay, so let me break this down. This is my ultimate entry model, which is what you can call really, if you want to put it in more friendly terms, a fake change of character. Is you want price to mitigate a POI, all right? You want that change of character to form, that break of structure to the downside on the 1 or the 5 minute time frame. Then the expectation is for smart money concept traders to start selling off supplies. They then get swept out. Then what we want to see is new structure form. As soon as price prints that new break of structure and change of character to the downside, we then look for shorts of those supplies, following through that expectational order flow. Okay, so that's just a bit of insight into my entry model. There's another entry model that I also use, which is also one of my favorites, is a mitigation into the POI, a sweep of that high, a displacement with a fair value gap entry. And this is what you call ICT's entry model, which is exactly what I used yesterday. So those two entry models are the two models that I keep in my arsenal, that I've backtested and collected the most data on, that has given me the best results. Okay, so let me come through to yesterday's trade. So my ultimate trade plan was going into session. All right, this was at 4 o'clock yesterday. I didn't look for any trades this day. I wanted to see price sweep these highs over here into the 50% of the zone. So again, we had the mitigation, that change of character. So we wanted to see price sweep those highs and look for that new structural break to the downside to then get involved. So let me quickly bring back price over here, I took two entries over here. One was a -1 and one was a +10R. Okay, so I came over to the 1 minute time frame. So in the model that I trade, when you're looking at structure, your 1 minute and 5 minutes is all just for entry confirmations. Your structure only applies on the daily, 4 hour, and M15. Okay, so I want you to make note of that. Otherwise, you are going to get confused. There's going to be too many structural points that you'll be looking at. So simply look at the daily, look at the 4 hour, which is your daily internal, and then look at the M15, which is your 4 hour internal, and then your 5 minutes and 1 minute is just for confirmation in your POIs, which stands for point of interest, your supply or demand zones. Okay, so this is exactly what I saw again. I saw price tap into this POI again, and this is exactly why I got stopped out, is because price hadn't swept these highs yet. Okay, saw mitigation. I wanted to see this high sweep and a displacement fair value gap entry. So over here, we had the sweep. We had this displacement. There was a fair value gap was over here as well, but I took the order block, stop at that high, because we also just swept these highs now, and I was targeting these demand areas for a 1 to 3 risk to reward, which I got mitigated, ran 1 to 1R, I didn't set BE, or I actually ran 1 to 2, I didn't set BE, I wanted the full 3R, and I got stopped out at stop loss. So again, an extra confluence for this entry over here was we mitigated the 50% of this 4 hour supply, again swept liquidity on that high, further into that POI, look for the displacement with the fair value gap, and this was the fair value gap that I entered over here. Okay, which tapped me in. It wasn't there. It tapped me in over there. That was the tap in, and I targeted the overall M15 internal low, which was a 1 to 9 risk to reward. My stop loss was exactly at 9.5. I say 1 to 9 just to cover for commissions and spread. Okay, so let me break down why I took this trade, the reasoning behind it. Again, just to break this through from the higher time frames. Is price just broke 4 hour structure to the upside after the daily break of structure to the downside? So, after that 4 hour break, we can now expect that daily pullback to areas of daily demand. So the expectation after the daily break of structure was to have that daily pullback, which we've now confirmed with that 4 hour break of structure to the upside. But after that 4 hour break of structure to the upside, we can expect that 4 hour pullback into 4 hour demand before looking to target those 4 hour week highs. So I was getting involved on counter trend trades, shorts, targeting demand areas that was in control, which is 100% valid simply because once you understand your structure and order flow, you can start to trade counter trend because you understand where price needs to go. Okay, so after this, I was then looking at this 4 hour supply, which then we're now understanding we're riding that 4 hour pullback after that 4 hour break of structure. So then I'm looking for M15 confirmations. Okay, let me just quickly come back here. The chart flopped out. So on the M15, we had that M15 break of structure to the upside, which what can we expect is that M15 pullback. But understanding that price will need to target these M15 strong lows to cater for that 4 hour pullback, shorts was really high probability going into session this morning, as that is where the expectational order flow is to go. Okay, so on the 1 minute time frame, this is how that trade played out at these fractal lows, or at this demand area. Over here is where I set break even because this was my initial target. But understanding we also just broke the M15 structure to the upside over here with the candle body closure, the M15 pullback is now due to start. So we entered this trade. I set break even over there. I didn't select partials. And this train absolutely ran beautifully. And we hit the full 1 to 9.5R. I risked 1% on this trade. That same 100K account that I was talking about in the beginning of this video is currently 25% up after the 9% trade that I secured yesterday. Okay, so back to the charts. What I was looking at this morning was, this was obviously now, I didn't even look at US session after this trade. I just let CPI play out. Looking at price this morning, if I just bring back price to live time, what I'm busy looking for is I want to see price mitigate this POI. I want to see price then sweep this high if I want to look for shorts. I want to see price sweep that, then print that displacement with a fair value gap to then enter on shorts, potentially targeting these M15 internal week lows and the overall M15 swing week lows. Understanding that all of this right here is just the M15 pullback, and all of this is just the 4-hour pullback. So the eventual expectation is to end this bearishness, all right, after that break of structure, to shift bullish. If we take out that new M15 strong high, the 4-hour then confirms to target those 4-hour weak highs. So again, everything is just a reaction. So my reaction and my trade plan for this morning is just to let price play out and let it print what it needs to print. So what I want to see printed is the sweep of this high, that displacement with fair value gap to then go short, which is my trade plan that I've marked out for my members as well this morning. Just to end things off, I want you to keep in mind, trading is a beautiful game. It's a beautiful industry. The fact you have the opportunity to be watching this video today, you are more lucky than millions of people out there who don't even have access to this type of knowledge, to this type of information that you're seeing right here on YouTube. With that being said, I've got some homework that I want you guys to do for me, specifically 2 things. Firstly, I want you to start enjoying your process, the process of trading, the journey of learning this beautiful skill, because it's a high-income skill that you will carry with you for the rest of your life. If you're going to hop into the charts and start trading to purely make money, the greed to try and get rich, to try and flex others or flex on social media, you're going to burn yourself out and you're going to disappoint yourself. Because once you start to love the journey, the goals and reward will naturally start to fall into place. And secondly, my second piece of homework for you guys is I'm going to give you a blank chart. Okay, I'm actually going to attach the image. I'm going to choose, for example, let's do US 30. I'm going to come over to the daily. Okay, just like this, as is right here. I'm going to actually screenshot this and I'm going to post the link down below in the description of this video. I want you to mark up this chart with the structure methodology that I've taught for you guys in today's video. You don't have to mark out the supply and demand zones yet. I just want you to mark out the breaks of structures. So I want you to mark out the structure on this blank chart. Send me a screenshot on Instagram. The first person that gets it right will win a free $5,000 live account from me. With no daily drawdown limit and with a max drawdown limit of 10%. Okay, so that's my homework for you guys today. Is firstly, enjoy your process, love the chart work, the beautiful industry of trading, and secondly, mark up this chart. First person that sends me the screenshot on Instagram and gets it right will win a free $5,000 live account. If you guys want to access my live streams, going into session with my members every single morning, my full course methodology, I will leave a link to that Discord community down below. Without further ado, guys, take care. Follow me on Instagram, and I'll chat to you guys over there in my DMs regarding today's video.